different ways to predict the market. So basically in trading, we'll see that we've got different ways of predicting where the price is going in order to profit from these movements. So there's two main ways to predict the markets, and it's basically two different types of trading. First one is fundamental. So as you know, currency exchange rates are driven by economics. So a way to analyze the market to predict the movements is to analyze the moves of the economy and the central bank. So that will be looking at all the unemployment rates, all the PMIs, all the GDP numbers coming out, also looking at the central banks, for example, the Federal Reserve in the US, what they're doing, what are their plans, their balance sheets. So it's really centered onto economics and what is basically happening in the world and in that specific country. So some traders trade with fundamentals. And then the other way to predict markets, which is my speciality, but we'll see, we will mix both for optimum strategies. It's called technical analysis. So technical analysis is basically studying the past to predict the future. So an example of that would be, let's say, every time, here's a nice example. We could see here, every time the price has reached this level, it's been rejected. Rejected, 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 and here rejected again. So by studying what's been happening here, just there we could have thought, well, it's been rejected like 5 times in the past, so it will probably bounce from that area. So that's the whole point of technical analysis. And so what you see, all the drawings on my chart, is all based on technical analysis. You can see here was an important level, it bounced, and here it bounced again many times, so important level. Here, bounce off this line, 1, 2, 3, 4, 5. So we could have expected that move up. So we'll see how to do all of that, obviously, but that is called technical analysis. So these are the two main ways to predict the market. And the ways we will do it is by using technical analysis and looking at all the news of the fundamentals, so all the GDP numbers, the unemployments, in order to confirm our moves and especially manage our risks. Because as we'll see, when the news comes out, the market will react to that news. So if it's a bad news and we want the trade to go up, and because of that news it goes down, well, we're screwed on that. So, but if we know when the data is coming out, we can manage our position and move our stop loss, as we said in the last video, move our stop loss and manage our risk in order to be the most profitable and consistent possible on the markets. So these are the two main ways and the ways we will predict the market.